Hello, my name is Eric Obradovich. I'm a senior here at California University, and I'm a dual major in both economics and finance. So, what I have for you today is an investment thesis based on the uranium market. I analyze the uranium market through EIC analysis, that's economy, industry, and company. Uh, this presentation and poster is based off of a paper that I wrote earlier this year, about May and June, where I analyzed this market. And I'm here today to share all that research with you. So the title of my poster is Nuclear Energy, a Carbon-Free Future in the Uranium Bull Market. So what exactly is uranium? So uranium is a natural resource found and mined out of the ground, just like coal or copper. And that uranium ore is eventually refined down into a singular um, uranium pellet, just like you see there off to the side. And thousands of those little pellets get stacked together in what's called a fuel rod. And about 200 of those fuel rods are inserted into a nuclear reactor. And that pellets serve as fuel that powers the fission reaction and creates electricity. Nuclear energy accounts for about 20% of the world's power and 10% of the power generated here in the United States. The industry as a whole is stagnating to declining as of right now due to the very bad rap that nuclear power gets from the public. However, in order to fight the climate crisis, I do believe that there will be a resurgence in the need for nuclear plants, especially considering nuclear's benefits. Despite public opinion, nuclear is actually an extremely safe power source, especially when compared to the millions and millions of people that die every year from coal, oil, and natural gas. It is extremely powerful. That single pellet that you see, no bigger than your thumbnail, has the energy equivalence of 1 ton of coal, 150 gallons of oil, or 17,000 cubic feet of natural gas. Nuclear is also clean. It emits no carbon. And not only that, it is extremely efficient. However, this thesis isn't based on nuclear energy, it's based on its input, that's being uranium. So let's talk more specifically about uranium, starting with the economy. So uranium is considered a commodity, and commodities are hard assets that could be gold, silver, oil, iron, copper, and uranium. And the commodity sector usually performs very well in periods of high inflation as investors look to preserve their purchasing power in hard assets. The last time that the commodity sector saw a bull run was the lead up to the 2008 crisis. And since the housing bubble burst, the commodity market has been in a bear market. Since the bursting of the housing bubble, the federal government, the Treasury, and the Federal Reserve have instituted very problematic policies that will ultimately lead to extremely high periods of inflation in the future. The federal government continues to run massive budget deficits and trade deficits. The Federal Reserve has continually pumped money into the economy through quantitative easing and has artificially suppressed interest rates for over 10 years. And the response to COVID in particular has extremely exacerbated this process, as the bond buying program that the Federal Reserve instituted in 2020 has seen the Federal Reserve create and pump $120 billion into our financial system every single month up until just last month, where they announced that they would be reducing that. They have also kept interest rates artificially low, between 0.25%. The problem with this is that all of this money that the Federal Reserve is creating is inflating the money supply. And when the money supply inflates, we devalue our currency and it leads to inflation. Despite what the Federal Reserve has been saying, inflation, I believe, will get worse and has just now started to pick up, as we saw the inflation reported for October of this year was 6.2%, which is the highest rate of inflation since 1990. And I believe that it will get worse going into next year, especially. So the industry for uranium looks even better after considering the economic conditions. So like any commodity, you can track the price of uranium. That's the graph that you see right down there in the corner. That is the spot price of uranium per pound going all the way back into the 90s. Since the meltdown of Fukushima in 2011, you can see the peak right there, almost at 80, about $77 a pound right after 2010. That was when Fukushima had its meltdown. After Fukushima, the market for uranium entered a bear market for two main reasons. One is excess supply. After the disaster, Japan retired many of its reactors, and other nations, seeing this event, started to retire their reactors as well. And the excess fuel after retiring many of these plants created a large amount of secondary supply, which suppressed the price. The other reason is capital investment and just general interest in starting new projects and investing in these projects dried up completely, as nuclear was now extremely unpopular and it was seen as a huge risk. These two combined sent the market tumbling down for over a decade, bouncing off of as low as $17 per pound in about 2016. The problem with this is that uranium miners, the companies that extract this ore from the ground, need a price between about $50 to $80 in order to make a profit. So because of these unsustainable market conditions, miners have shut their mines off. There has been a secondary supply that has been draining in the market over this last decade with no new supply coming in. This has now created a structural deficit of uranium to the world's nuclear reactors, millions and millions of pounds that will get worse as this new decade continues to go on. Either the price of uranium increases to encourage new supply, or the lights go out for 20% of the world. It is essentially a supply squeeze. So after looking at the economic conditions and the industry conditions, what kind of companies are we looking at and who would we be interested in buying? So there's three types of companies. There are explorers, developers, and producers. Explorers are companies that may have a plot of land, but still have to explore it and check for deposits. A developer has deposits and has pounds in the ground, but still has yet to build the infrastructure to pull it out. And then there are producers, companies that already have the infrastructure, they have deposits, and they are able to extract uranium and process it and sell it to utility companies. So there are many different companies, and there are ETFs that any investor can buy, but I will specifically go over Energy Fuels, ticker UUUU is one of my favorites. Energy Fuels is the leading producer of uranium here in the United States. The stock has already seen a very big run up as the uranium price has begun to bounce, and it's returned over 500% just this year. And one of the biggest reasons why I like this company in particular is for a few reasons. One, they have expanded their mining business into the rare earth elements space. These are minerals and resources that are used in more high-tech type of products like electric vehicle batteries or phone batteries or solar panels, things like that. They have done this in order to survive this bear market, as Energy Fuels uranium mines are currently shut off. They have created a new revenue stream for themselves, and they have also, through expanding their business model to rare earth elements, staved off share dilution, which is one big problem in some of the other companies, is equity dilution. And lastly, since Uranium Fuels is a producer, they have the ability to take advantage and start signing contracts when the uranium sector ultimately begins to take off. I do believe that the bull market for this has already started, and I'm excited to see where the rest of my thesis will play out. That's all I have for you today. Thank you for watching my presentation. Thank you.